we are just 2 hours away from the Bank of Canada announcement and press conference. And we have seen actually a lot of volatility around Canadian dollar, more precisely, ahead of the meeting. So I will start a bit of what is expected from the Bank of Canada in less than 2 hours, and where the market is actually has been set up right now. So the latest, let me also share my MT4. It's a usual live analysis, by the way, so you can actually ask anything you want. I will try to cover any asset that you want me to check, but I will give priority to the Canadian related assets, just because we are just 2 minutes away from the bank announcement. And generally, in the spotlight this week was the central banks. We had the RBA out of the way. We have Bank of Canada today. We're gonna see ECB, European Central Bank, tomorrow, which is the highlight of the whole week. So let me start with the Canadian dollar. And I would like to highlight in this point, guys, that is what we are expecting. Okay, until I found the cross. And then so Dollar-CAD. Just let me share it with you. So, as I was saying, what is expected? Okay, you can also see the chart, the Dollar-CAD chart. So this is the 1 hour chart. As you can see, appreciated significantly this week, away from the 124.80 low up to the 127 area. So a big rally for Dollar-CAD. And just to at this point, I would like to know, guys, that possibly this rally has to do with the broad dollar strength that has risen, that has pushed the Dollar-CAD higher. Why is that? This is actually because of the positioning ahead of the Bank of Canada. So we are seeing some position adjustments into the Bank of Canada policy. So what the market is widely expected to see from the Bank of Canada today is no change in the interest rate, so 0.25 rate setting to be remain unchanged. However, they are expecting to see a bit of a further reduction on the quantitative easing. I would like to remind at this point that the Bank of Canada was the very first bank that actually proceeded to a reduction of the quantitative easing, the so-called tapering. So we are expecting to see further reduction, not a significant one, but further reduction in the quantitative easing of around 1 billion Canadian dollars by the end of this year. So why is that? The reduction is quite limited. It's quite small, because even though the Canadian economy has actually gave good signs, sustainable signs of recovery. However, it's still another country that has been impacted by the Delta variant and has introduced some fresh uncertainties around the outlook, eroding with this way the confidence in the recovery scenario. So this is something that we see repeated from all the other countries, from Europe, US, Japan, China, Australia, and so on and so forth. So consequently, the scenario is that with the expectation, more precisely, is that the Bank of Canada will not alter significantly the quantitative easing in this meeting. So, and if or it might not alert it at all. So, if it does alert it, it will be not so significant. It will probably reach another 1 billion Canadian dollars, especially after the governor, McLean, delivered its economic progress report. This is what really significantly helped the markets and the analysts projecting the possibility of a no alteration of the quantitative easing, or or to trim the quantity needs in by another $1 billion. So, as I was saying, we have seen dollar-CAD rallying to 127 high this week, benefited from the dollar strength, but more or less it has to do with the positioning ahead, the position adjustments ahead of the Bank of Canada. So this was the main driver, along, of course, with as I was saying, the slightly stronger dollar. So today, more precisely, the dollar and some other um, risk-related currencies, such as the yen, have seen a rally, have seen an upwards momentum, and that has to do with the emerging risk of positioning theme that we have in the market. So we have seen dollar index, more precisely, breaking to 1 week high at 92.70. So I will show you right now the dollar index, so you can see this near-term recovery from the US dollar. So, and here it is, 92.60. This is the daily chart. You can see that for the third day in a row, it's moving higher, retesting the 20-day moving average. So for 3 days in a row, for the whole week more precisely, we have a stronger dollar, something that is actually drives the dollar-CAD as well ahead of the BOC members today. So let's get back to the dollar-CAD. And at this point, I would like also to discuss a bit about the oil. Let me check the chart whether you have anything to add, guys. Hello, Vicky. Hello, I'm glad that you are here once again. So let me check for any questions. Oh, a lot of spamming. Guys, we're here. I'm here to help you. So please put some comments in regards to questions that you have, and in regards to assets that you want me to cover, to analyze from a technical or in a fundamental perspective. Up to you, whatever you are interested. Hello, Sean Han. Hello. Can you give some tips? I cannot give you some tips. I can analyze for you, dear Sean. So let me know which asset you want me to cover, and I will try to do my best to explain it in order to help you take the most appropriate decision for you. So Vicky's asking about gold. Okay, before we start, just since we started with dollar-CAD and we are less than 2 hours away from the Bank of Canada, let's cover dollar-CAD analysis and the oil. Okay, and I will shift to gold. Okay, you want gold first. Okay, guys. Okay. Since you insist, let's go to gold first. So it was over here. Yeah, here it is. So okay, I can understand why you want gold, and a lot of you are asking about gold actually. Okay. I cannot state entry or stop loss levels. I cannot tell you what to do, guys, but I will analyze it, and you can try to remain focused. Try to hear what I'm saying in order to understand what you should do and how you should analyze your market in order to take the most appropriate decision. So let's start with the daily chart, okay? Because I like reviewing the whole picture before going down to the intraday trading. So as we can see, for the first time since the mid of August, let me zoom in so you can see, the gold has returned and closed below the 20-day moving average. This is something that hasn't been happened since the mid of August. So it had a sharp pullback yesterday below the 20-day moving average. So what that means, this is adding some pressure to the bulls. This implies that there is an increasing bearish bias, an increasing selling pressure in the medium-term picture. However, so far today, we have seen stabilizing above yesterday's lows. Okay, so what we can say about the daily chart? Not much. We can see pressure, but as long as we don't get further confirmation in regards to a downside scenario, so what I mean by further confirmation, another daily pullback, another decline, then we cannot really see anything. We are like, we can say that this is a neutral outlook for now in the daily time frame. As long as we see, as long as we see the another negative candle or a candle closing below the 20-day moving average tonight. So now let's shift to the 1 hour chart. Consolidation remains after that sharp pullback. The asset stabilized, okay, stabilized a bit within the 1790s and 1800s territory. So with fast moving average clashing, so neutral, I'm afraid. Vicky, Kenneth, um, who is talking about Hong Kong. It's a lot of neutral situation over here, a lot of sideways movement. So what you should do, guys, okay, in order to stay alert, is to find your immediate support and resistance levels. So the immediate support levels, if you're intraday traders, obviously is on this double top, 1800s, more precisely 1802. Okay, why the immediate support lies down to yesterday's low. So I will put it on my fractals just to give some space, few pips below the yesterday's bottom. So 1791, or if we want to round it up, it will be 1790. So these are my immediate support and resistance levels. So in this case, and ahead of the US session, actually US session opened like 30 minutes ago, no, 10 minutes ago, sorry. So as soon as we get some volatility the back of the for the gold, we're gonna have a clear direction. If the asset appreciates and breaks this 1802 level, then we could see some rally, intraday rally for gold with next resistance at 1808 or even 1815 territory. Now, if it continues extending legs to the downside, breaking this triple fractal in the 1790 territory, then that will imply that the the decline has not run out of steam. That was a temporary correction of the down leg that we have seen this week, with next support on last week's lows. So 1778 or even 1772. So use your fractals and the previous lows as the next target areas in case that the asset extend another leg to the downside, breaking yesterday's lows. Okay, so hopefully that was clear, guys, in regards to gold. I am speaking about gold names. So as I was saying, for now, both intraday, so 1 hour chart, as you can see, is narrow, flatten Bollingers, clash, flatten moving average. So this implies to a sideways movement. It might be a correction after this sell-off. Who knows? It might mean that the decline has run out of steam. No one can tell right now, as long as we don't see a break either above the immediate resistance, the 1802, or a break of the 1791 territory. So a break of the 1791 territory will turn the attention back to 1770 territory or even 1760 territory, while a rebound away from and above the 1802 could turn the attention to the mid area of this range and the 1814 territory. Okay, so that was for gold. Guys, we don't offer Bitcoin. We don't offer cryptos anymore. So I cannot really analyze Bitcoin because we don't offer them. Okay, we don't offer them anymore. Uh, we don't provide any cryptocurrency assets. So let's move on to. Okay. Okay, blind leading the blind. I'm not sure what you want me, what you're trying to say with that, but doing my best to help you guys. So it's up to you. So let's move on. You have a reply about gold. Okay, guys. In regards to the daily traders, to the medium term traders, the asset still retested 20-day moving average. So the positive outlook hasn't really changed yet as long as we don't see a confirmed turn into the lower bollinger band area. So I'm referring to a potential closure tonight of our daily candle below the 20-day moving average. Okay, so for now, we have a neutral outlook in a daily chart as well. So let's continue. US, USA 30, otherwise known as Dow Jones. So we have 500 and Nasdaq. And let's put the Dow Jones USA 30 future over here. Okay, so there was actually the stocks have been in a sell-off this week. Okay, we have seen more precisely Asian Wall Street stocks, even European stocks today broadly lower. So it was a follow-up of the US futures yesterday in the weaker and the largely weaker session in Asia overnight. And uh, what actually triggered these declines was first of all, if we go back to the Asia session, it was, as I was saying, the Japan and the Japan and actually we have seen. Sorry, I ran out of steam. We have seen actually investors pulling out, if you heard, from China's Evergrande. So there was a bit of a fear, there was a bit of a sell off in the Chinese equities, a bit of a mixed Asian session, most precisely, but mostly lower, with the only exception being Japan and Nikkei. Um, and the only exception was Nikkei because of the GDP number, of the second quarter GDP number that actually came stronger than expected. So overall, the Asia session was lower. The so far European stock markets were also lower, along with the US futures as well. Um, and uh, this implies to the lack of important economic data from Europe and US for the moment, and as the eyes are in the central banks and on the prospect of further tightening from Euro, from ECB, but also from Bank of England. That's why I'm going to cover I'm going to cover pound dollar next. So there is a general, not the desire, the expectation, the anticipation of a fiscal tightening from the Bank of England, but in the Eurozone as well, from ECB as well. So this is adding some pressure. On the stocks on the ahead of this. In the anticipation of the tightening. While in the eurozone, it is expected that the ECB will announce a slight taper of the PPP purchase tomorrow. So um, all these are wrapped in dovish guidance on rates. Okay, that's why we have seen DAX lower, FTSE lower, but in general, the US futures also fractionally lower because now we have a debate between the ECB and Fed. So there will be a comparison between what these how these two economies are doing and how their central banks will proceed from now onwards. So there will be a comparison, and this will significantly impact the common currency euro and dollar, and as a consequence, the US futures as well and the Eurozone futures as well. A lot of anticipation for tomorrow's ECB meeting. That's why European stocks, but also US futures, are a bit lower. Um, but also earnings are responsible for these pullbacks that we have seen in the stock markets. We had earnings including Lululemon, Sentinel, GameStop. So these, along with, if I'm not mistaken, that was the SEC actually threatened GameStop with a fine earlier. So this has added some pressure on the stock market. So let's get back to the down that was for its Sagit. Sorry for over analyzing everything there, Nadir. Let's see the technicals behind the USA 30. So let's start with the daily. In general, it's still following an uptrend channel. I will use my regression because okay. Regularmente standard deviation. Okay. So tight one. And I'm gonna use 1.5 standard deviation. I think this is more appropriate. Yes. So support, immediate support, and a wider support over here. Perfect. I have used two standard deviation channels. Sorry, and as we can, oops, here we are. Let's keep these ranges to get. Sorry for that, guys. Okay, perfect. This is what I wanted. As we have seen, the asset, it was consolidating for more than 2 weeks until it finally turned below the 20-day moving average, further northwards away from the midline of this 3 months channel, upwards channel, and turn southwards. So right now, it has a long tail lower, but the candle is still like very, very close to the open price. So what that implies, it implies that there is a bit of a decision. However, the pressure is still on the downside because can you see this long leg similar to what happened over here? So there is a lot of pressure, but bulls managed to keep the asset close to yesterday's territory. So in the daily chart, this looks to be for now a limited decline before a potential rebound. But let's have a look. You can see that this limited decline from the MACD, narrow, flatten above zero, so it sustains the positive momentum. RSI is close to 50, but it has fallen below it, so at 47 but flatten. So there is a bit of a decision in the daily chart. So this raise questions whether this is just this decline already run out of steam and we're gonna see a rebound somewhere here. But yeah, let's wait and see. In the 1 hour chart, as you can see, there is still a lot of negative bias. So what that means, we have seen that the asset is unable to break and to break the 20-day moving average. Okay, it's keep posting lower highs and lower lows, it tried to get back to the 20-day moving average, but it failed and quickly closed below it, and it has turned southwards. So what that implies that the sellers are still in control of the USA 30, with momentum indicators agree with this picture, because as you can see, MACD aggressively uh, lower, okay, extending lower, far away from zero, doesn't imply to a possible reversion. RSI tried to recover, but it's turning back down again. Can you see that? Try to recover, stalled, and it's turning back down again. And I will use those stochastic, which is my fast moving average. Sorry, my fast indicator. So if I just, you cannot see that. Okay. So RSI, sorry, stochastic appreciated, but okay, can you see? It remains below 80. So if we see another bearish cross from stochastic similar to this one, then this will imply to the a pullback lower once again. So keep an eye on the fast moving average. Any cross or the continuation of 5 exponential moving average below the 9 pointing lower will also strengthen the bearish outlook for dollar for USA 30. Hopefully that was okay, Nadir. Um, Wait a minute, where did we left? Oil, of course. Okay, guys. Okay. In general, you should know that oil outlook remain positive in the long term. So we have seen some pullbacks, corrections like here and here, but in general, the oil outlook is being supported from the easing from the OPEC, from the from the easing that we have seen OPEC confirming 2 weeks ago. So the fundamentals in the long term support the oil. Now, what's going on now? We have seen a pullback from the $75 down to the 60 to the 60 territory, even lower than 60. A bit of like a twist, a bottom over here, and a pullback above the 22 moving average. But it has been traded a bit choppy, a bit dodgily since yesterday. So even though it has rallied significantly on Monday, it didn't manage to extend gains, but however, it managed to sustain gains from Monday. So the Tuesday's close was around 68.30, if I'm not mistaken, and that has been supported by the production outages in the Gulf of Mexico, which they were at 80%, like over 1 million barrels of output still shutting as a result of the hurricane. Okay, so this, along with the research on dollar, have actually provided some ceiling, some limited gains on the oil. However, in focus today will be the API inventory data, which are expected to post a 4 million barrels per day of crude raw. So this could strengthen again the oil over here, okay? Because as I said, the overall fundamental, but also the technical outlook. So in the medium term, weekly, daily, etc., there is still positive momentum. So MACD remains positive since the November last year. Okay, so it has slowed down a bit, but sustained. But both signal line and histogram are above zero. RSI sustains a move above 50. So also The asset is trending higher, so we can see that it sustains an upwards trajectory above the 50, above the 200-day moving average. So overall, medium term, in the medium term positive, and the long term positive outlook with um, um, so let me just, yeah, with, can you see this bullish cross of 250 period moving average, day weekly moving average, suggesting that there is further steam to the upside in the long term, guys, in the long term. Okay, so let's separate a bit the things. Now, if we got just, so this is something that we could see also in the daily picture, sustains a floor and a move above the 20-day moving average, above the 67 territory for 2 weeks in a row, struggling a bit to extend gains, but it managed to maintain more than a month's gains. So it managed to maintain the gains that we have seen since the 61 low, $61 low. So it's around the mid of this decline. If I put a Fibonacci level, you will be able to see that is sustaining 50% gains of the decline that we have seen since the top of the year, since the peak of the year. Okay, so positive outlook remains, positive bias holds. And let's shift to the 1 hour chart. And significantly, actually, it's the most interesting chart so far today, because as you can see, it managed to break wicks resistance. So wicks resistance is set at 69.20. So it has been seen on Monday, didn't manage to extend gains. It was retested again on Tuesday until it managed to break it just now, just a minute ago, actually, more precisely. So extended and broken the week's high, and actually appreciated a reverse more than 61.8% of the of September's range. So this is significant, guys. There is a confluence over here. There's a confluence of week's high and 61 point Fibonacci level, which is a key retracement level. So we can see that a positive outlook is being developed, is being strengthened intraday. So nice pullback away from the 67 territory. Yesterday, some massive, so far today, since the Asian session, some full body bullish candles, one over here, a bit of a correction, another one here, full body bullish candle, further extension over here, correction, and an extension. So positive outlook for oil, with next key resistance pretty much at the 69.80 or even 70 level. This is the next key resistance territory for the asset. So eyes are turning here because of the continuous rally for the US oil. MACD has turned positive, RSI extending higher, and stochastic also managed to move above 80, and it keeps pointing upwards. It hasn't really turned lower. So there is bullish pressure. There are some bulls pushing the asset higher right now, in the near term, in the short term. Okay, gold's first love. Um, okay, if we just dollar keep going strong this week. Okay, the momentum is quite like it presents like strength for dollar this week. However, everything depends on the ECB and how much it will be diversified from the Fed. Okay, yeah, be a bit careful, Jamal, because ECB matters this time, because there will be, as I said, a comparison. So we're gonna see whether ECB once again will follow the steps of Fed, or actually will differentiate itself. So, and it's always the comparison between the two economies. Um, Intraday, if I could say, okay, intraday the momentum remains positive. So this sideways movement looks to be just corrections, okay, before another attempt to the upside. Because as you can see, the momentum is strong for the dollar so far today. So a lot of bullish bias holds. Okay, so you can see that Bollingers are pointing upwards, the assets above the 20 and 200 period moving average. Um, so a break of the latest high at 90 to 71, it could turn the attention back to the end of the week, last week's high territory and the 93 level, the 93 level. So here you go. Already broken the 38.2 Fibonacci level. Next immediate support resistance, lies on the 90 to 80, which was actually last Friday's retest area. So, however, momentum looks positive. Can you see how MACD is rising? So, printing higher highs. You see that higher highs. The same stands for RSI, a bit of a correction and then another attempt to the upside. So what I can say, Jamal, is that intraday in the near term, the dollar is still strong. In regards to the week, everything will depend on today's ECB comments and actions. Whether we're going to see a shift of the emerging risk condition or not. What else? Yeah, let's keep moving. Pound. Yes, I promised to cover pound. Let's shift to pound. Okay. Let's start with the daily chart. Let me get rid of these rectangles. Perfect. Let me clear a bit this mess, guys. Sorry. Okay, I prefer this one. Let's start with the daily setup. Okay. So what we have over here, we have another kind of a rounding top, similar to that one, similar to that one. So we have seen in general the pound having some fluctuations, okay, for the whole year, failing to exit the 42 area, but also uh, being under pressure in general. So let's emphasize on what's going on right now. Okay, so the pound actually has been a very very interesting cross in general. This week, because we have a decisive pullback. Okay, so cable, as you can see, is for a third day in a row to the downside, and today just managed to cross the 20-day moving average and getting back to below 137.60 territory. So this extends the correction from Friday's 1 month high. So this is so it has returned all the gains that have been seen prior and on the and during the U.S. jobs release and that massive U.S. jobs report miss. So apparently the dollar has seen picked up bits, with markets having placed greater emphasis on the offsetting factors to the weak dollar jobs figures, including the big revision that we have seen to July and June data and the drop of unemployment. So people emphasize on that, and that's why I've seen this emerging risk of positioning today. So this is once again a dollar currency pip gap as a safe haven demand rather than pound's weakness. But in contrast with while the other dollar pairs, the pound has seen, it might be one of the weaker currencies so far today, is because we had also um, a lot of pressure from Mr. Boris Johnson. So on this decline, Mr. Boris actually added further pressure with the unexpected 1.25 points of a percentage, 1.25% tax hikes. So um, in order to help the economy, in order to continue their relief packages, they have increased taxes in UK. Okay, so the increase in taxes for the people in UK, the strong dollar, the UK data that they have shown a moderation in the economic growth. All these added some pressure this week for pound, even though the overall outlook looks a bit still positive. But the declines, this week's decline is for these three reasons: dollar strength, Boris tax hike, and some weak data from the UK, adding concerns in regards to the economic growth of the UK. And on the back, so we also have the Delta variant, but this is in every single other currency in the world. So we keep seeing daily new COVID cases rising. Um, so yeah, that imply that these are the three reasons of this pullback. Now, technically, we can see that. Let me just okay. We can see that um, the asset remains under pressure. So MACD remains negative even though it has reached zero territory. RSI is close to 50 but is pointing downwards. So there is further steam to the downside for pound, for the pound. Okay. So what else needs to be stated? Okay, we need further we need further confirmations in the medium outlook, whether it will continue going lower or whether it will stabilize. But so far, these three three consecutive declines, along with negative MACD and RSI pointing lower, implies to the possible to further decline in the medium term. So for the rest of the week, or even the rest of the September as well. But let's get back to the 1 hour chart to see what's going on over there. So yeah, negative bias remains in the intraday picture. As you see, parabolic stars are above pivot, are above the price, so that's a bearish sign. Let me put the intraday setup, the 5 and 9 exponential moving average. Here it is. So, and I will use also parabolic SAR once again. So, parabolic SAR is above the price, so that's a bearish sign. Fast moving average, 5 and 9 hour exponential moving average are pointing once again to the downside, so implies to further decline. RSI had this turn and is flirting again with 30, so another bearish sign. Stochastic the same, ready to post a bearish cross. MACD remains negative, so intraday outlook remains weak for pound. Next support, okay, next support, guys, if we see the asset breaking this latest fractal, the next support piece can be seen. Let's put some. Okay, I'll use my Fibonacci extension. So next support could be seen at 37, 10, or even 30, 136.80. This is still far away, but for now, look at the Fibonacci expansions. So the very first one, the very first immediate support level lies to the latest fractal along with the 161 Fibonacci expansion. So that's around 20 pips lower. Then we can find some support. We could see a potential support at 137.13, 200 exponential moving average. And if both broken significantly, then support could be seen back to 26th of August low and the 136.80. So this means a breakout of the around 137 level. Okay. So we have cover pound. Muhammad, please visit our. Okay, I saw that you are through YouTube. So if you go to the YouTube channel or Hot Forex YouTube channel, click on the webinars in English. Okay, and we have webinars exclusively for Fibonacci and how you can apply them, how you can use them use them for putting your targets, your stop loss, to identify your breakout levels, your entry levels, and so on and so forth. So click on the YouTube channel, go to the Hot Forex YouTube channel, find the webinars in English playlist, and you can find the Fibonacci webinars over there. So Cat Swiss. Here it is, Cat Swiss. A, a decline, like a down leg so far today. So a very weak attempt to go down, but fortunately the outlook of Cat Swiss remains strong. So let me just zoom out a bit. As you can see, actually, let me put the wick. Okay. Okay. I've seen a bit of a sideways movement since May. So the asset has been in a sideways movement for nearly 2 quarters now, while it has recently has failed to break the 0.73 area, and we have seen this pullback yesterday and today so far. But the momentum indicators are a bit mixed, flat at 50, MACD at 0. So nothing clear in the daily time frame, guys. Let's shift to the 1 hour, and let me put the 1 hour, the intraday setup. So extended above 20 period moving average, but fast moving average have clashed. They're pointing to the right hand side. MACD at 0, RSI at 53 and slowing down. Nothing really interesting, I'm afraid, dear Ravindra. I don't know why you mentioned Cat Swiss. The only thing that I will go to the 30-minute chart, go down to the 30-minute chart, and the only way I could help you is tell you that this is a key retracement level. The 0.7280 is a key retracement level. So if it breaks, then that implies that we could see a boost up to the 73 area and the 73.20 area. However, immediate support lies at just a few pips lower, precisely over here, 72.60 territory. So a pullback down and a closure of the hourly candle at 72.60 or below that could open the doors to 72.30. Okay? Aussie. Aussie. Okay, commodity currencies have been a bit in a pullback this week, but that doesn't change so far the overall outlook. So, Aussie, for example, okay, guys. So Aussie dollar. Let's start. Let's do the so declining for the third day in a row, but not a lot, not a big candle so far today. So that might implies that the decline is running out of steam because it has managed to stabilize a bit above the 0.7370 territory. So keep an eye on Aussie because this decline might running out of steam already. Okay, so let's see intraday, however. So a big sell-off on yesterday, sideways at the closure, another sell-off this morning, but it tried to recover some losses in the European session, but it failed because, as you can see, as we have entered the US session, it started pulling back down again with. Let me put the 30-minute chart. This will help you. As you can see, sideways, 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 failing to extend gains for 2 hours in a row. And since the US market open, it has put back down again, breaking 5 consecutive sessions, breaking the low 5 consecutive sessions, and it's pulled back down again with momentum indicators falling as well. So we have an intraday pressure for uh, for for Aussie. Sorry. So eyes are pretty much on the yesterday on sorry on today's low and the 0.7347 territory. Yeah, this failure to extend gains and this we need to wait for this for a bearish cross to be confirmed over here. But momentum, as MACD is over here, are confirming a lot of pressure from sellers. And yeah, what else? Okay, extending significantly. Yes, a lot of bearish pressure intraday. So keep an eye. So eye attention is actually turning into the day's lows. Okay, you can see how big the how aggressive this negative bias is from the MACD indicator intraday. Daily in the daily chart, as long as we don't see a breakout of the 38.2 Fibonacci level, and that means the 0.7335 level, this implies that this decline is just a correction. As long as we don't see decisive breakout of the 0.7335 level. Um, Thank you for your kind words, Nim. Um, Solomon, we provide some sessions, private sessions with clients. So please contact your sales agent, your agent with Hot Forex to arrange a call with us. Okay, a private call with us. Guys, we don't offer cryptos anymore. We don't offer cryptos. Okay, so I cannot reply to your Bitcoin question. Okay, I know that Bitcoin it has actually it's in a sell-off, if I'm not mistaken, due to some technical issues after it has been announced as a legal tender in El Salvador. But I cannot analyze it because we don't have it in our MT4. We don't no longer offer cryptocurrencies. We have analyzed pound. Uh, have you done the Nasdaq futures? We have done Dow Jones. Let's shift to Nasdaq if you want to. sustaining gains, sideways intraday, so it's not so attractive intraday, we can say, but sustains the all times high territory. So overall positive. So if you are referring to the long term picture, my dear Max, positive, positive, positive remains extending higher as long as we don't see a pullback below the 1500, 15,000 level. Now, if you're referring to intraday stuff, intraday picture, short-term time frame, let's go down to the 1 hour chart. We have seen a bit of a decline, a bit of a shift lower so far this week, but okay, here it is. Sustaining how it's a bit, it's trying to form some kind of a descending triangle, but nothing really helpful so far. Rebounded from 50,600, retesting the 20-day moving average. Bullish, dodgy, a bit of a pullback. Let's go down to the 30-minute chart. It might help us. So sideways, sideways, sideways. No, nothing, I'm afraid. A lot of consolidation. We need either a pullback and a breakout of the latest fractal 156054 in order to turn the attention back to this floor again. Okay, Max? Or we need a decisive breakout, not solely of the immediate fractal, the 15678 fractal, but more precisely this downtrend by connecting the highs of the week. So that implies to a breakout of the 15700 territory. This will trigger the attention further to the upside with for fresh record highs. So for the time being, looks limited, looks sideways, consolidating. So keep an eye on the 15654 level. This is the 30-minute chart. It's a very sharp, fast environment. If I just click on the 15-minute chart, dun, 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 flat and fast moving average. Yeah, you see. Now I try to go to fast environments, but they're still consolidating. So set your set your support, set your resistance areas in order if they are broken, you will know where to turn on next. Okay, guys. Okay, Prince is saying sell Nasdaq. Cannot see that for now, I'm afraid, but you believe it's overextended there? This is correction, sideways correction because of the overextended condition. So, yeah, let's wait and see. Yeah, keep an eye on this immediate support and resistance levels, guys. Okay, 1560 54 could open the doors to 15605, while a breakout of this 15677 could retest once again the 15,700. Okay, gold once again, since four of you have requested it once again, and I will finish with gold, guys. Okay, since you are interested on that. So let's put the 1 hour chart. We had actually a big sell-off yesterday. You already know that. Turning the attention to a potential pullback, but we don't have confirmation yet. So I want you tonight at the closure to check, or tomorrow morning to check how the day's candle, the Wednesday's candle close. If we see a bearish candle extending the losses, then that could imply to a shift of the outlook to the downside, and we could turn our attention to the 1675 territory. However, if it managed to turn back up again, then that will imply that this pullback was just temporary one. Okay, intraday now, sideways, a lot of consolidation ahead of the banks. Immediate resistance at 1802. 1802, I will round it up, 1802 territory. So a break of that could retest the 200 period moving average and then 1808 level, while a break of weeks support, weeks low at 1792, could open the doors, as I said, to 1775, 1760, or even 1740. But yeah, we need to see a decisive break of the 1790 in order to believe that it could come down to 1770 and 1760 territory. There is an overall bearish bias, but we need confirmation. We need to see a closure of the 4-hour candle lower, breaking the 1792. As soon as you don't see something like that, then don't try to remain outside, to keep monitoring the gold until you see something powerful, something to trigger your attention, such as a breakout of the 1792. We need to see a bearish candle closing and breaking below the 1792 in order the doors to open for a potential move down to 1770 or even 1760 level. Okay, as long as you don't see that, then neutral outlook prevails. Okay, guys, you're very welcome, dear Michael. So let me check for some final questions. I have just done gold, their number one TV show. So sideways, intraday, sideways in the daily time frame as well. So a bit of a neutral zone, but you need to keep an eye on the 1790 territory, because if that breaks, it could open the doors down to 1770 or even 1760 territory. Okay. Okay, guys, thank you very much for attending. I have to call it a day. Keep your attention on the news and the central bank more precisely, because this is where the focus is turning into, and why we have seen this emerging risk of conditions and the stronger dollar. This is ahead of the ECB more precisely. So keep an eye on the banks and take care. So have a great day ahead. Have a great day ahead, and I'll see you again tomorrow. Stuart, he will host a live analysis in YouTube and Facebook for covering the ECB announcement and Ms. Lagarde question and answer session, and any impact that the ECB will have on the markets. So you're gonna see with Stuart tomorrow the markets during Ms. Lagarde's interview. So thank you very much. Take care. Hope you're having a great day ahead. I'll see you again tomorrow. Bye bye.